Oh, we started. You just hot mic people.
We always do that.
I love it.
It's a sneaky way of getting you in.
Yeah, it's
I'm relaxed.
Yeah, I can't think of a single miner that has been like a real miner that has been anti-ordinals aggressively. You've been on the cusp, but I think standard Bitcoin's official position is probably something a little bit more.
Tom is an ordinal maxi.
Permissive. Yeah.
I mean, for my individual miners, seeing the fees go up, I mean,
yeah,
it's not bad.
yeah.
For Bitcoin conferences for a really long time, when it was always just mining and Lightning, and it was just like, you guys fucking hate each other. So seeing the transaction fees kind of boost on chain.
Wait, miners and Lightning hate each other?
Yeah, for an extended period of time. I think like Liz.
Is it because Lightning is theft from the layer 1?
From like a fee perspective, yeah, it's like overcapacity, right?
Which is true.
And like over time, the theory was, I think it was Lightning Labs and Elizabeth Stark was sort of putting out the thesis that eventually channel open and close is going to drive a tremendous amount, but there's a long period of time where miners just continue to bleed and suffer when transaction fees are de minimis.
Yeah, I really don't agree with that leap of logic.
Which one?
I just don't understand any.
I had many.
No, I don't understand any assumption we make in Bitcoin around a certain cohort of users, whether they're businesses or individuals, being content to pay extremely high fees sustainably over time and never innovating away from that. I don't know why we would ever assume that, because anytime we've seen that in the past, unless it's idiots inscribing rock paintings into the blockchain, they don't want to continue doing that, and they find ways to not do it.
I don't know if I agree with that. I think memorializing your transaction on the Bitcoin blockchain should be expensive, and it's going to be expensive.
Yeah, I don't disagree with that. What I disagree with is that we are expecting somehow, like if we're expecting an ample amount of mining revenue to exist coming from transaction fees, we're expecting someone to voluntarily pay that and build a business around that. I just think that person is always going to try and find ways to pay less fees. So if it was Lightning, if we're going to assume that it's Lightning down the road, I believe that Lightning nodes will find ways to settle less frequently to the main chain. And so that revenue will not materialize as readily for the miners, which I think could be an issue. But I'm a miner, so that's what I'm worried about.
Yeah, I think as readily is the operative takeaway that I took there, right? Like there are operational constraints and there's runway and cash flow concerns and things like that. Like as the network grows, it's not really considering a public mining operation as opposed to like a hobbyist or whoever else would try and join the network. So I think there's always going to be dislocations there as like capacity grows so vast. And I mean, people didn't really use liquid for, extended.
Still don't.
Still trying to be polite.
Yeah.
And Lightning took a very long time. I think Lightning is still lagging a little bit, but like.
What do you think about the Lightning vulnerabilities with the
Pinning attacks?
Yeah, the trusting miner vulnerability.
Can you explain it?
The pinning attack. So Antoine Riard hit the dev mailing list last month to disclose a bug that was discovered at the end of last year, so the end of 2022. It essentially enabled this pinning attack where your channel counterparty, if they were nefarious, could work with the miners to sort of run up your fees so you couldn't spend your end of your transaction in the channel and then essentially steal your funds. But I think the capital intensity of that particular attack and the coordination between the nefarious actor and the mining pools, to me, it seems like a stretch. Antoine seems to think it's a bigger threat than people are basically putting it out there. But he also said he was going to execute the attack on October 30th, and it doesn't seem like many funds were taken.
He's the one who announced his retirement from Lightning, right?
Yes.
Would you qualify that as a rage quit?
Potentially.
Seems like it
he's not quitting Bitcoin, he's just quitting Lightning.
Because of this?
Because of this particular attack, yes.
There's been a lot of disharmony amongst like Lightning core devs, right? There's a lot of different development teams, and how they want to approach scalability and security issues differs, pretty widely. I think Evan and his team at Zeus took a little bit of heat over the non-custodial wallets that he implemented at Pubkey, actually onboarding a couple of our bartenders so they were able to accept Lightning tips directly and not have to rely on a custodial solution. I think what we might see in the near term to deal with these issues are nodes having more malleability or customization, like setting higher outbound traffic limits or thresholds or whatever, creating sort of cul-de-sacs, which really fuck with the liquidity issues network wide if a Lightning node is not like a true routing node. But there are regulatory pressures that we've talked about at Pubkey before in terms of like the bit license and whether or not a Lightning node qualifies as a money service business just because it's simply doing some
money
routing.
Transmitter.
Money service business, money transmitter, and bit license all effectively the same thing, just with different regulators. So I think that, I don't know, from my perspective, I think we're going to see more demand from users for that customization to fit, their specific circumstances. But it does cause, I think, rifts across like the core development community.
Would we be better off with just one implementation of Lightning?
I like the diversity of experimentation. It's still so early. That's the other thing. I mean, going back to the whole fees conversation, particularly those who FUD Bitcoin security budget into the future, I think it's completely asinine to project.
I do that.
I know. I think it's asinine to project future revenues with the snapshot of activity up to this point in time. Like adoption is nowhere near where we think it can be.
Right.
And
let me ask you a question though. Is it asinine for a miner, somebody who's got extremely illiquid position in the future revenue potential of mining as a business, which is a function of mining revenue, fees, and subsidy, and the price of Bitcoin? Is it asinine for them to be zeroed in on how fees are going to be increasing in the future?
No, not at all. But I think it's asinine to say it's not going to happen. I don't know if we've ever discussed this, Jamie, but I think you can apply.
I love talking about it.
I think we can apply Jevons paradox to a Bitcoin UTXO. So Jevons paradox is typically referenced in oil and gas markets where when we found petroleum products, we thought we're going to it's a paradox because the more efficient you become with a particular resource, and with petrochemicals, we became more efficient very quickly. Kerosene, the gas that we put in our cars, jet fuel, all of that. You think you use less because you can do more with less, but because you're more efficient with it, it drives the demand up and you can do so much more.
Right.
And that's what we see in oil and gas markets. I think that same concept can be applied to a Bitcoin UTXO via things like SegWit, Taproot, Schnorr, second layers. They basically make UTXOs more efficient in terms of what you can do with them. You can do more with less with the Bitcoin UTXO. I think that will create an environment of demand for UTXOs that is unlike anything we've seen up to this point in time. It's just a timing thing. We're still so very early.
Is there a chart that tracks the total revenue from fees per block
Absolutely.
over time, and has it trended up?
It has a modest
In
uptrend.
dollar terms, yes.
Yes, that's what I care about.
Go to insights.brains.com. I think they have that chart.
In
Does it
Satoshi
account
terms,
for
though,
inflation?
Yeah.
Yeah, in Satoshi terms, it has a modest uptrend. 2023 has been an uptrend because of ordinals.
Yeah, but if you take ordinal spikes out of it, because I think that first ordinal spike was maybe like 2 weeks. Something like that, 3 weeks.
Double the block reward.
It doubled the block reward, but it was basically, I have the screen behind me. It looks like an Eiffel Tower, depending on how
Yeah,
how
it was
big
a
is.
great month.
And then there has been a little bit of like a step up recently. But
Yes.
if you were to take those out, pretty flat. Like I think Clark
Daily
Moody
mining
even
revenue.
has a more like simplified view of transaction fee as a percent of block rewards, and de minimis for the most part.
It is. And so I think there's, you're
From a miner's
to
perspective.
call it like fudding Bitcoin and say I'm selling my Bitcoin or I'm no longer interested in this network because fees haven't materialized yet, and this is going to be a problem 20 years from now, I think is asinine. But I think it is not asinine for a miner or a Bitcoiner in general who believes that mining needs to be healthy in order for Bitcoin to be healthy, for them to be actively contemplating, working on, funding, researching ways that L1 fees can rise while Bitcoin scalability improves. That's why something like drivechains is interesting to almost every miner you tell it to, who doesn't necessarily understand the technical details of it. But what they do understand is that a drive chain theoretically pushes revenue from a layer 2 scaling solution directly back to the miners. And that is like the high level drive chains pitch.
I would push back a little bit. I actually think that miners get cut out of the equation with drive chains a lot faster than they think, because it's a two-way peg. So Bitcoin goes in and you buy, the drive chain Zcash or whatever, and then there's a 6-month period to depeg, right? To go back to Bitcoin. And the reason there's a 6-month period is because, the way the depegging process works, you basically have a pretty clear shot if you were to do it in a couple of blocks for a miner to just steal those rewards.
Steal the funds, right.
Whatever. But I think what you see develop really quickly is a third peg, which is just OTC desks that say, you know what, leave it there and I'm going to pay you out.
Right.
And the miners get cut out of that situation aggressively. And I think that happens pretty much overnight.
Assumptions there, right? You have to make an assumption about where the sidechain peg trades relative to the layer 1 Bitcoin. We don't know that. And I'm not necessarily married to the technical construct of the drive chain, which is the 6-month pegging back and forth and bridging. I guess you call it bridging if you're a shitcoiner.
Pegging.
Pegging.
A lot of pegging going on in drive chain land.
Do you prefer pegging?
Excellent joke. Thomas prefers pegging.
Yeah.
Almost all the time.
Against bridging? Yeah.
Yeah.
Yes.
I had you as liking pagan.
As you were saying?
You really teed that one up. No. So the general view, I hold this without having a super strong technical opinion of the way that BIP 300 and 301 are the proposed implementation. I like the idea that there's an opportunity for layer 2 scaling to continue to incentivize deploying more hash rate onto the network. Right now, if Lightning adoption picks up, it's going to reach a point where there's saturation, and then the fees should bleed over into the layer 1. But if you see Lightning adoption ticking up, that's not really as much of a direct incentive to install hash rate and go and build out mining, because there's no guarantee that those fees will pass through.
It feels like we're so early, though, to care.
Absolutely.
Because most of us are just holding our Bitcoin and not really spending it right now.
Right.
Because there's a massive incentive to. And so we're not really using it as a currency.
I think that's absolutely a valid response. And I didn't used to feel this way quite so passionately until I had a shitload of hash rate out in the middle of the West Texas desert. And now I do. And now I have a really strong opinion about it. I want to pump my bags. And I also think it's absolutely true that fees need to go up in order for Bitcoin to work a century from now. Fees need to be material in order for Bitcoin to work.
It's not our problem. It's a century from now.
Right. But we should be trying to design the best system that we can. And I think these choices do matter.
I agree with that. I think most people would agree with that premise. It's how do we get there? 300, 301 to me is just a myriad of systemic problems, and pushing it through in the way that Layer 2 Labs wants to, because of whatever representation they made to their investors on how they're going to return capital, is I don't think necessarily the right approach that we should drive into.
What are these BIPs? Explain to people.
So,
you got this one.
I'm out of my technical depth. So we had Paul Stork, and it was myself and Arbed Out, and this is where I just sort of checked out and handed it over to Arbed Out, because he's a very skilled and talented protocol level engineer. So I'm not the right person to ask. I know that both of them are basically required for the pegging, depegging.
Yeah, one
process
is it allows the block to count to a higher number to basically create slots for side chains, merge mine side chains, where effectively a miner can use their valid proof of work on the layer one to either verify directly, or other users can verify through the miner transactions on a side chain. So it allows you to kind of double use proof of work through a specific process that is a Bitcoin sidechain. So there's currently sidechains on Bitcoin right now. There's currently merge mining on Bitcoin, and there's merge mining on a bunch of chains like Dogecoin and Litecoin are merge mined, where if you're mining one, you're mining both, and the proof of work is valid on both chains. This implementation basically, in layperson's terms, it formalizes that with a BIP and lays out certain sort of preliminary proposals for how that would work. I think it's 256 side chains are available to be used. And then there's this pegging and depegging mechanism, bridging, debridging, where through an implicit trust in a miner-based multi-signature scheme, Bitcoin can flow off of the layer one and then be used in these side chains. And in order to bridge back to the Bitcoin layer one from this side chain, there's quite a bit of trust that goes into the miners, with the idea being that you're trusting the miners because they're earning revenue from these side chains. And so it's not in the miners' best interest to steal from you, but technically they can do it. And so the criticism of it is definitely warranted, and some more thought going into it is warranted. And there's a huge Twitter kerfuffle going on.
I've seen it.
Yeah.
Me as a Bitcoin user, just somebody who stores Bitcoin, sometimes receives it and sometimes sends it. What do these upgrades give me?
Zcash.
But I don't want Zcash.
Then
It's already failed, Zcash.
Yeah, I think the answer is it would potentially offer a different method of scaling that isn't Lightning, and this is my perspective as a miner, this could result in a world where the scaling that occurs on Bitcoin ends up paying more fees to the miners on layer one, so it makes Bitcoin more resilient to an attack.
So it's kind of like a hybrid of base chain and Lightning.
I think sidechain is a good definition for it. I don't know.
What do you think, Marty?
I think, what are the lower hanging fruits that we can go after first? Number one, price appreciating certainly helps miner revenues denominated in dollars. The price is appreciating. That means adoption's going up, which likely means there's more activity on the base chain, which means fees are going up within each block. Other things like hedging products, like how can miners hedge risk and lock in revenues without taking on too much hash rate risk in the future? What are some other revenue lines that miners could take that are external to
power trading?
Yeah, the Bitcoin blockchain that can help their businesses survive.
Is it all really like a red herring in that miners don't really care about revenues, they care about profitability, and whatever you do to increase revenues, there will just therefore be more miners, and profitability will always be a challenge?
That's a great question. I think that's actually spot on. Is that if there's a certain amount of installed hash rate at a certain point, right now there's about 15 gigawatts of installed mining capacity that we know of varying degrees of efficiency on machines. And so we could go to an environment where the majority of those miners are breaking even. And that mining ecosystem looks, I would say, very unhealthy from a resistance to an attack perspective. Whereas if that same 15 gigawatts is earning an average of 50% gross margin, that looks a lot healthier, because as we saw in the last bear market, when the marginal miner is not earning money, there's a lot of bankruptcies and everyone's breaking even, their stock trades at book value or below book value. And effectively, you could consider that the cost to an attack. If you just went and acquired all the equity of a miner, or it was in bankruptcy and you acquired all their debt for 30 cents on the dollar, you just bought all of that hashing power and infrastructure for an extreme discount. So the metric that I like to look at is overall profitability of the network relative to the recent high. So we've still only seen total installed hash rate continue to go up on a gigawatts perspective. I think where we're at now, 15 gigawatts is an all-time high.
Ripping.
Yeah. So what you want to avoid is receding too much from that, where there's all this installed infrastructure that's just sitting there, not hashing, maybe changing hands to an extremely low cost bidder, bankruptcy court, something like that. And then that effectively becomes fuel stock for an attack potentially.
It's kind of funny. We started with transaction fees as like the primary like lever at like miners' disposal. So like just to take a quick step back for people that are like new to mining, on the cost side of the equation for miners, everything's denominated in dollars. On the revenue side, it's denominated in hash price effectively. And hash price has a couple of volatility risks embedded within it. The biggest, the most well-known is just the market price of Bitcoin fluctuating. The second biggest would be difficulty, variance risk, and transaction fees. We started talking about the one that was probably the least impactful. One of the biggest ones is the price of Bitcoin, but I think for mining operations, difficulty and their pro rata expected share of what they can earn is probably the biggest one to look at. And when everybody is just installing more and more, I mean, do we ever see a point where there's going to be like competitor sabotage to take a rival's data center offline or something so that they could actually just get a boost for their expected pro rata share?
Yeah,
Here in Texas, I don't know. There could
when
be
you
something.
proposed that was actually really interesting. Thomas proposed an interesting idea, which was, what if all of the miners got together and everybody just agreed to only mine half as much the next day? Then everybody would consume half as much electricity, and the reward would be the same. So it would just
Change the code.
It would be reducing the electricity consumed for mining while the revenue stayed the same. And if there were more cooperation amongst miners, like if we operated like a cartel, then just like OPEC does, okay, let's come up with a production level so that we can control the supply of oil and then manipulate the price. If all of the miners just said, okay, we all have X amount of installed hash rate, well, tomorrow is my day off. And everybody just rotated through the month, then each miner would consume less electricity and the revenue that they earn would be the same, but their operating budget would be lower.
If that happened, I'm going to immediately go and buy as many ASICs as I want and completely ignore you.
See, that's the thing, is it requires cooperation. Cartels require cooperation. And just like OPEC, where all the OPEC members agree to production quotas, but then everyone cheats, that's why it doesn't work in a game theory game, because the prisoner's dilemma would be if one person cheats, they do much better. So then everyone's incentivized to cheat.
Yeah.
Except it's slightly more viable on the semiconductor level or mining pool level, right? If you think about like the chip manufacturers running a similar playbook and restricting supply, hoarding equipment.
Right. Do you believe that happened in 2021?
It's really hard. There's not a lot of, I think, great visibility. You have TSMC and Samsung being the two biggest, but you have other chip manufacturers that are players, not as significant, but they're in the mix. There's some data to show that could have been the case, but like not.
I mean, it was 18 months.
There was also
really
supply
good
chain issues. It was COVID.
There were, yeah, that's true. But it was arguably the best.
Amnesty for everybody.
It was the best period in ASIC manufacturer history in terms of, I think, gross profit.
What did peak at? $120 a terahash?
Yeah, some
XP?
people paid. Yeah.
Yeah.
They paid $120 a T. And yeah, it was Q4 2020 through Q2 of 2022 that ASIC prices were north of $40, $50 a terahash.
Yeah. Well, this brings up another important aspect of all this is, do we reach ASIC commodification? I mean, Bitmain came out and they're pricing the 21 series at $14 a terahash. It's the most efficient, most high hashing machine that's ever existed.
Yeah.
They're going to be able to produce what, 50 to 100,000 a month starting.
That's what they say, yeah.
Starting next year. And so like, how does the barrier to entry to getting access to ASICs becoming significantly lower potentially if they keep it at that price? Many people think they're trying to box MicroBT out of the market, and they have the economies of scale to do so.
Yeah.
So what does that do to this whole conversation?
And is it also every time they do produce a new, more efficient machine, is it like, oh fuck, all that shit we've bought over the last 2 years is now bunk, I need to upgrade?
It depends on your cost of electricity, but if you're on the high side of the cost of production curve, then yeah, you either need to upgrade or die. But this has been particularly, I think, disruptive with what Marty's talking about, because the XP is a 23 joules per terahash machine, and they were selling them north of $20 a terahash for basically the last year through August, roughly. And bear market, similar mining conditions, difficulty going up. absolutely a bear market for mining during that period. And so Bitmain's got the XP out there for $23 a T. And then they come out and they announce the S21, which you would expect in their normal playbook, that would be the premium product that trades at a premium price, maybe call it $28 or $30 a T. So a premium to where they're selling the XPs, and they price it at $14 a T. So they undercut themselves dramatically, and they undercut all of the other ASIC manufacturers at the same time with the most efficient machine heading into the halving. So I think Marty's is spot on that looks like a market share grab and potentially an emotional decision targeted at MicroBT, who had been winning more market share. It's disruptive. I don't know how many of those S21s have been purchased, but if you model out the numbers right now, they look incredible. So it's hard to ignore them if you're a serious miner.
Yeah, especially the Hydra series. It's insane.
Yeah.
How much hash rate you can get out of those machines.
Going back to the fees, sorry, because I don't think we finished it. I still don't care because I'm like with you, Marty. I see a couple of things, right? Me as a simple user, that the fees are pretty. The money that can be earned from a block is pretty high at the moment. What, $300,000?
0.7 Bitcoin a block.
And what was it at the last halving?
It was a lot lower.
Yeah, so
It was about 0.07 to
no, not in just fees, like the total reward per block. Is it going up every halving?
in USD value.
USD, yes. In Bitcoin, no.
Yes, generally it is. That's the signal that's causing more electricity to be consumed to mine. Is the USD values increasing generally over time?
So my view is, again, back to the point, is that it's a hyper competitive market. Mm-hmm. It seems like there's always enough fees. It's the profitability that's the issue in a hyper competitive market. It's just totally cutthroat. And so really the focus is on, will there be enough in fees, like you said, in 100 years' time? But if Bitcoin isn't being used regularly as a settlement layer for, in between whatever institutions or whatever in 100 years' time, it's probably failed. Mm-hmm. So it just doesn't, it feels like, I come with you, it feels like a red herring of a discussion. It feels like, no offense, I just feel like it's miners moaning because they're not making enough profit.
Right.
It's the profit's the issue, not the fees.
I think it's a totally valid take. I actually do. And I welcome the debate about it. I'm excited to see that people are just debating it and talking about it more openly. To me, it's kind of like, okay, mechanically, this is how we're expecting this design to work, where at some point we're expecting some user to pay these high fees to keep the mining incentive strong. If we can agree that we want the mining incentive to be strong in the future, and I think most people will agree on that, then I just want to take the conversation one step further and say, okay, well, who are we expecting to pay that fee?
Yeah. What will the fees be made up of in 50, 60 years' time?
It's a great question, and nobody really knows. I would prefer to think about solutions, and I'm not committed to a particular solution at all. I'd like to see solutions where everybody can pay a very, very small transaction fee, and that fee can flow through to the layer one miners. I think that to me seems really simple and really elegant, where you keep the layer one node requirements very low by keeping block sizes low. That was effectively the reason why the block size war was won by the small block camp, was to keep the requirements to running a node pretty minimal. And so if we can have that, and then still transaction fees from the layer two can flow through to the greedy, self-interested miner like me, which is what the network is predicated on, is me being greedy and self-interested, then to me that feels like a more elegant and simple design than assuming that some user down the road is going to be willing to pay a very high transaction fee to move funds on the layer one. That's all.
Because I don't think in 50 years the fees are going to be made up of a bunch of people sending $1,000, $10,000.
Yeah, like I set a $10 transaction earlier this week as a demo to somebody who'd never downloaded a Bitcoin wallet. And they're like, how do you actually receive Bitcoin? So I had them download Blue Wallet, sent them.
What'd you pay, $5?
I paid $2 for it. So
I paid $3.50 the other day.
Yeah. Paid $2 for it. But I guess this gets at the point I'm trying to make is like, what does Bitcoin look like at scale? And I am sort of in agreement with Saifedean's positioning of Bitcoin at scale as the central bank like settlement layer, where the OPECs of the world, the people doing large oil trades or large trades in other markets, are using the base layer to settle those low trades, and they will pay a fee that's commensurate with the trades that they're making, which should be profitable for miners. And then on top of that, you have all these other things that you can do with the UTXO, whether it's a DLC, opening a lightning channel, locking something at a Fedi mint, something like ARC that hasn't even been released yet. Like, I think there's just going to be a ton of utility that these UTXOs have.
You just sent a transaction, one of the most important transactions, right? An educational transaction where you're explaining this to somebody. I would prioritize that as like a high value Bitcoin transaction, and that's 20%. And then if you look at other like basic commerce, if somebody wants to settle a tab at Pubkey, it's also the same situation, but you also have the settlement delay and then the knock-on effects from an operation perspective and other stuff. Like, the base layer can't accomplish all the things that we want it to just in and of itself.
You accept base chain settlement at Pubkey?
No, we turned it off, actually. We turned it off during the ordinal spike, just because we knew that, like, if there's going to be 2-hour block or something, they're not going to stick around, right? They're going to leave. It's not settled yet. Ooh, I hope it comes in. Like if there's a hung transaction or something like that. So we shut it off, and it's lightning only now.
Yeah.
It's the only way that it would really work at Pubkey.
I think Parker Lewis has actually articulated the opposing view to my position really well, and I acknowledge that there are many worlds where he's absolutely right, which is that the ability to settle a transaction so quickly and so cheaply on Lightning increases Bitcoin's monetary utility so much. You combine that with kind of what Lynn Alden says in her book, which is the reason why fiat money displaced gold was because you can settle fiat money so much quicker than you can settle gold. And so if the Lightning Network is envisioned to be the cheapest and fastest form of the best possible money, then that drives Bitcoin's monetary utility through the roof. Hyper-Bitcoinization is inevitable, and fees likely never drop below 1 BTC per block in aggregate between the subsidy and the fees paid. I think that's a really solid explanation and is definitely plausible.
Let me put another point to you and just see if this adds to the conversation. I've been wrestling with something for quite some time now. The idea that if we do have hyper-Bitcoinization, how many people on this planet could realistically be self-sovereign on the base chain? Like, what is the actual number?
Right now, I mean,
can it
in the tens of millions?
Tens of millions, right?
Right.
So with global hyper-Bitcoinization, if it happens, if it becomes true global money,
probably more than that, but hundreds of millions.
We're not going to have 8 billion people on the base chain.
In the current state, probably not, but there are proposals out there to create sort of partial ownership of an individual UTXO, which would enable that. But that's something that's not here yet. And that's the way Bitcoin's scaled. And in the past, as you reach these limits, the fees go berserk. The network either slows down or something happens. And then people are like, all right, here's where the pain point is. How are we going to solve this? And it's not until you reach those points until these things materialize.
And then add another point to this. When I made any of my documentaries in places under high inflation, particularly recently in Lebanon, that people have no disposable income for Bitcoin, and you get some people come back and say, yeah, but what if it's even $1 a month? Like, they just don't have a can of Coke they normally have or a beer, and they just buy just $1 of Bitcoin. That's going to help them. It's like, okay, cool. So how are they buying that $1 of Bitcoin? Because they're probably not buying it on the base chain. If they are, they're probably not going to be holding their own keys. They'll leave it on an exchange. And so my question really is can everyone be truly self-sovereign with Bitcoin in the way it is? And if they're not, then what are the answers to that? And are we going to end up building bank-like multi-institution custody solutions, and therefore we can have a bunch of those around the world, and they're going to be the settlement. They're going to be settling with each other, like banks do at the moment.
An idea that's been in my head that's not fully flushed out is that pools actually become banks, and the ability to control and move blocks, and potentially in conjunction with lightning channels or side chains or whatever it might be, the pool becomes effectively the most incentivized market participant to be trusted with your settlement, where They have a check and balance naturally where if the pool starts messing around, they'll lose their users, their hash rate becomes less valuable, the layer 2 revenues become less valuable, and there's so much just kind of overlapping incentive alignment there where the pool as the bank allowing, it's a trusted relationship, but it's kind of the same trust that we have right now with the layer 1 where we trust the miner to be economically rational and pursue profit maximization with a long-term incentive timeline. Miners are making 2, 3, 4 year Bitcoin denominated investments. And so they have the longest duration, least liquid Bitcoin position of any participant, a world where they become more intimately involved in financial services. It's something that...
So back, like you were saying, is the base chain the central bank, and these custody solutions are banks themselves. They're all settling with each other, but these users could be going on and creating accounts and they can be buying Bitcoin on it, but really they're not self-sovereign. They don't own a UTXO.
Right.
And like the not your keys, not your Bitcoin is obviously a very important narrative for Bitcoin, but ultimately it will die as a narrative.
And potentially.
Yeah.
Not for everybody, but I mean, this goes back to, what you just described is essentially a free banking system built on Bitcoin, which is something that Hal Finney talked about in December of 2010 on bitcointalk.org. And I think comparing that to the incumbent system that we're trying to get away from, while in its current state, which is arguably not going to be the state into perpetuity, where not everybody on Earth is going to be able to own a UTXO. Maybe we get something where you have partial ownership of a UTXO and you do have a key that grants you access to that. But let's run with the assumption that doesn't happen. This free banking system that can emerge where you have pools of Bitcoin managed by different actors, different private actors throughout the global economy. Maybe they're running a Fedi Mint or something like that. And you just have this more robust, permissionless competition for a free banking system. And at the end of the day, as long as the 21 million supply cap is protected, mining sufficiently distributed, that is a future that is materially better than the one that we live in.
Yeah.
The world that we live in
The free
today.
banking system, it's wild to read about it. You can kind of see it, some of the hypothetical scenarios that would play out in scenarios like this, they already played out in history when they had free banking, where banks would issue their own currency and it would be backed by their liabilities. And there was somebody was talking about the other day, I can't remember, where they were talking about Tether redeeming USDC as an attack. So Tether was buying up USDC and then redeeming it to Circle, so reducing the outstanding flow of USDC that Circle had, which is how Circle earns money because they invest that in treasuries. And so they were actively buying all the USDC and reducing the AUM of USDC, and so weakening their competitor. And I think it was Nick Carter. He brought up that this attack is actually how free banks used to attack each other, where they would buy up the notes of a competing bank and then go and redeem all of the notes and try and force a run on the bank where their liabilities couldn't meet their outstanding deposits.
Is that Tether USD a hypothetical, or is that why?
No,
it's USDC has been free.
Yeah,
free
it's
fall,
down 21 billion. Tether's up
Tether's
22.
been doing a redeem attack against USDC.
Paolo, wow.
Yeah, it's the Scottish free banking era. This is where all these stories come from.
Nick wrote a whole article on this.
Yeah, he did. Yeah.
But a free banking structure on top of Bitcoin sounds pretty cool. The risk is of some kind of rug or rehypothecating what they have on there if somebody doesn't have.
You could have visibility, right? Theoretically, like if we have a uptick in sort of sophistication and competency of users, they would require one of those entities to have proof of reserves and be a little bit more transparent of what they have.
And proof of liabilities.
Sure.
Yeah. And then
Which is hard to prove.
Yeah.
the multi-institution model, which you described, I think that also creates a unique social incentive model where if each individual institution within a multi-sig quorum has their own reputation and their own business line, you can make the argument that the likelihood of cooperation with somebody who wants to rug people leveraging that multi-institution quorum is decreased significantly because the other institution in that Quorum has their own reputation, their own business lines, and they don't want to ruin their reputation by collaborating with somebody else in the Quorum to rug all their users.
Because it would take multiple individuals within multiple different institutions. It's like an unlikely attack.
To agree,
Yeah.
We're going to rug all of our users.
Yeah. Yeah, it's wild. But
And if those users are miners too, then they're rugging themselves in a lot of ways.
Yeah.
The sunk capex of mining, I think, is a really powerful incentive. And I think it's where Ethereum really made a mistake, was by allowing the security capital of your network to be not only liquid, meaning unstake and sell, which it was disabled for a while. I'm not sure if it's enabled now, but you can unstake your security capital and sell it in 2 seconds. And then they create this liquid staking derivative, which is like a WMD, a weapon of mass destruction for security collateral, where you can go and say, I'm going to secure the network with my ETH, and then I'm going to get a token back that is the same value as my security capital. You can go use that to go short Ethereum. Then you're staking, you're securing the network. You also have no economic risk if the price of Ethereum goes down because you're shorted, and there's no collateral mismatch on the short. The illiquidity of security collateral, the transformers, the containers, the ASICs themselves, the PDUs, the network equipment, all of that stuff that goes into the ground and can't go anywhere and is purpose-built for Bitcoin mining, that's what makes the security incentive so strong, is that it's illiquid. And Ethereum, they made it liquid and effectively destroyed their security incentive. In Bitcoin, it's so illiquid that you could build other forms of validation on top of it. Like that would be the layer 2 hypothesis, would be this illiquid security collateral can be trusted to perform other forms of settlement.
And if you had this free banking system on top, which was lots of, hopefully hundreds, thousands of different solutions, that would be your settlement. They'll be settling every day between each other. That would be your fees.
Yeah, I mean, I think that's one way to think about it, is that the institutions that have the most sunk capex, illiquid security collateral into Bitcoin could potentially win the market of who is the most trusted party to move individuals off of a fully sovereign Bitcoin experience. Where, in Lightning, like you say, you're not a sovereign individual. If you're not on the layer 1, you've got to move back to the layer 1. Somebody's going to win the battle for user trust there. It will probably be whoever offers the best monetary utility. So fastest settlement and lowest cost. However,
like an ETF.
Jamie, I do like this idea of pools emerging as the banking institutions of the future. Because we've talked about this quite a bit, but it's always intuitively made sense to me, particularly when we're in this transitionary period, that Bitcoin exchanges need exposure to mining via forward contract or something if they want to be able to provide liquidity to their end users, essentially just have access to Bitcoin to broker a trade at some point in the future. And I don't know if that exact trajectory of how mining and sort of the financial product aspect of Bitcoin interacting with end users materializes, but that something intuitively in my mind says there has to be this connection between the mining world and like the financial product world on a Bitcoin standard.
Yeah, I still haven't really fully conceptualized it, but it just seems like that should be a ticket that's in the race. It's like, okay, if we're going to, like you say, Peter, if we're moving individuals off of self-sovereignty on the layer 1, who are they going to go to on the layer 2? And hash rate and pools as banks, as trusted parties, where you're already trusting them to a certain extent for fast confirmations to settle transactions. So you sort of extend that trust and you put more incentive on good behavior from them. I think there's something there for sure.
Yeah. I mean, look, I think about it a lot because I keep hearing people say, like, your key's not your Bitcoin, be self-sovereign. I keep thinking, well, most people are not going to be able to be. So, like, why aren't we talking about that?
I think there's a world. It was tongue in cheek when I said like an ETF, but I do think that there's a world where this materializes and Bitcoin is incredibly valuable. But a lot of the other like promise and utility and like hope that I think early Bitcoiners had, is kind of negated by that. And it seems like we're at an inflection point for that right now with the ETFs, with sort of the financialization of mining powerhouses at multiple levels, not just the mining operators themselves, but mining pools, ASIC manufacturers, others. This is becoming more of a financialized asset class.
Absolutely. Yeah.
And I think that with that comes a lot of shifting power dynamics. Like if you look at how the S1 was written from BlackRock, there are certain things that if you read it from the point of view where you have some knowledge of how Bitcoin Core, development processes have taken place over the last however many years, like it certainly has some language that is problematic in certain parts.
Like what?
The determination of what the one true Bitcoin is.
Yeah.
Sort of coordination with mining pools, right? Coordination with miners.
Is that not just a disclosure risk?
No, I forget exactly where it was in the S1. I don't believe it was in the disclosures. I think it was actually in describing the underlying assets, right, and how they define what Bitcoin is.
So how would that play out?
A lot of malleability.
Do you think Coinbase went to them and be like, "Hey, we really messed this up the first time it happened. Like, you should look out for this."
How would that play out? Would it be a contentious fork where?
I don't think they're going to be paying out Bitcoin Cash dividends like GBTC did.
Right.
But they might just scoop those going forward. But they could also be moving to, I don't know. There's lots of FUD and other things that have been out there talking about sustainable Bitcoin, green Bitcoin, bifurcating the network, and trying to consolidate more know your miner, know your customer objectives.
Yeah.
And that's playing out in other areas simultaneously, right? So the FinCEN language is concerning. There are other, proposed bills that have been out there that I know, Bitcoin Policy Institute and others have sort of sprung into action to sort of wrap their heads around and provide an alternative view. This week's going to be interesting. There's lots of politicians here in Texas for
lots of fundraisers,
lots of fundraisers,
pandering.
Lots of fundraisers.
I think one important thing to note at this particular point in the conversation is we should all thank Satoshi for the aggressive supply schedule that he laid out when he launched Bitcoin. Like, luckily for us, a majority of coins are held in self-custody. And to your point, there certainly is a possible future in which Thomas described materializing. And I think as Bitcoiners want to preserve the sanctity of the sovereignty of the network, it's really, all right, most of the Bitcoin is held in self-custody. That's sort of like a defense line that we have, like moving forward to ensure that the financial system that develops and builds on top of the base layer is done what many would deem to be the right way, which is respecting some of these sovereign ideals that Bitcoin strives for.
Just dozens of grumpy billionaires at conferences.
Yes.
Bitcoin's vision failed. So healthy.
I think I heard you say before, Marty, a while back that we should just ignore politicians. Just forget about them.
I think it's much more productive. I think.
Do you not see any benefit in some of the work that's being done by Bitcoin Policy Institute?
And I certainly do. I think education's good. And I do think if we can get a good message across, I think messaging is important. I think getting these messages to politicians who have significant sway is important. But at the end of the day, I also think it's a losing effort to depend on voting these rights through. Rights aren't voted on. They're taken and defended.
Coin Center earlier today, I think Peter put out a piece sort of, positing whether or not the BSA, the Bank Secrecy Act, should be challenged as unconstitutional.
It should be.
100 years later. How old is the BSA?
It's 1970.
Oh, 1970? Oh, I thought it was much older.
WTF happened in 1971.
Oh, there we go. Okay, yeah. I thought it was more like a depression thing. But
don't you kind of think that Saylor's take on that is
what's his take?
Is worthy? Well, he says that, sure, as time goes on, individuals may be presented with the choice that they have to leave the jurisdiction that they call home or that they've called home forever in order to retain their right to hold and use Bitcoin freely. And that will play out over time and there's nothing that we can do to stop it. It's going to happen. But as far as staying and fighting for your jurisdiction, I think Texas is a great example. Like it's not a coincidence that there's a ton of Bitcoiners in Texas now, and in making itself a hospitable place to live and do business in the Bitcoin industry, Texas has now attracted a ton of industry participants here. And in turn, those industry participants are funding politicians, funding lobbying, putting amendments into the state constitution. Pierre's done a great job here. Parker's done a great job here. And they've made it sort of a haven for Bitcoiners. Personally, I'm extremely thankful that there's a place like Texas in the United States where you can come as a Bitcoiner and have a Bitcoin business and not feel like a fucking criminal. I feel like a criminal in other states. My bank and financial institutions treat me like a criminal in other states in the US, and they don't do it here.
We have a whole country back home which does that.
Yeah.
We lack the benefit of a federal system. We have no optionality. It's in our country or out of our country.
Yeah.
And we have no competition on the stupidity of these laws. I've had 3 bank accounts closed. We all saw what happened to Nigel Farage having his bank account closed.
Yeah.
We have massive censorship. We have libel tourism. People globally using the UK as a place to censor people. I envy it so much.
It's funny that we're having this discussion because this was all predicted. This is all plays into the game theory. The jurisdictional arbitrage has been talked about for well over a decade. We're just living through the middle of it.
For sure. I think we're at there. You actually don't need to do much lobbying. So I sort of agree with you. You can ignore them, but I have this epic tinfoil hat theory, which is that politicians haven't realized yet that the best way to receive a bribe is actually in Bitcoin and not in cash. And slowly,
Bob Menendez.
Yeah, Menendez. Boom, Jersey, caught with a safe full of gold and a bunch of cash. Down he goes. Brain wallet solves that problem, Bob. And that's a big aha moment. And so as more young people get elected to political office and get bribed and are corrupt, which is probably the most consistent part of human history is politicians getting bribed, they're going to be bribed in Bitcoin, and they're going to be inherently lobbying for Bitcoin-related things because their bribe bags are going to be in Bitcoin. And so it actually solves itself.
I think it solves itself that way. And then from the other end too.
I love it. I agree.
I do think the concept of a soft landing's talked a lot about Yellen, Powell, people at that part of the power structure here in the United States. I do think if this wave of institutional adoption really is coming and it materializes in pension funds and retirement funds and endowments and Bitcoin rips and is the asset that actually creates that soft landing for these pensions. It closes the gaps for a lot of these underfunded, unfunded liabilities. That's going to be an instance where the pensioners whose pensions were previously underfunded got that problem solved via Bitcoin, and they're simply not going to allow the state to not allow them to participate.
Well, the state, we have Steve McClurgan earlier. We were talking about the state could solve their $3 trillion debt problem. That they've proven they can print as much money as they want when they want. Why not print $1 trillion and buy Bitcoin? Sit in your hands for 10 years and
they don't even need to. They just need to come out and say, Bitfinex, we're not giving your coins back. We're going to hold them on our balance sheet for 2 decades at least.
How many Bitcoin has the U.S. government had and auctioned off?
a lot.
It's,
how many from the Silk Road? Was it 140,000?
I thought Silk Road was 300,000, wasn't it?
Yeah, it was 6 digits, I think.
Yeah.
Mostly Tim Draper and
It
Cumberland
was blocks of 26,000.
Yeah.
I told Tim Draper 3 of those Bitcoin were mine. I want them fucking back.
But you can always rely on the government to just be an idiot with managing its finances. What did Trump want to do when rates were at 1-2%? He wanted to refinance all of the U.S.'s debt into 10 years and long-dated bonds. Basically, rates are low. We owe all this money. Let's lock in the low rates for 10 years. Everybody was refinancing their mortgage at the all-time low of rates. And of course, everyone said, oh, Trump wants to do it. We're not going to do it. We hate Trump. That's a bad idea. And now all of the debt is rolling off.
Yeah.
And rates are now 5%. And so we owe 5% on all that debt instead of locking it in for 10 years at 1 or 2%. It's just fiscal incompetence, just like auctioning off Bitcoins that you seize from criminals. Just hold it. It's an option.
Cleanest coins in the world.
What was Janet Yellen? I think she was just issuing like 1 and 2 year notes.
Yeah, 1 and 2 year notes.
Do you think she ordered animal style at In-N-Out at the PR campaign? I think that was 100% staged to just like take some of the wind out of the
What are you
sails.
talking about? What is that?
Janet Yellen order at In-N-Out. It's a fantastic picture.
I didn't see this at all.
Yeah,
Before her
yes.
meeting with Xi Jinping, she went
Yes.
to In-N-Out Burger.
Maybe.
And it's just her. And the reason I think it's staged is because it's literally just her. And there's a guy in the back. Are you trying to find this? Yeah. There's a guy in the back.
Where, in San Francisco?
Yeah. And then she went like straight to the airport, and there's the handshaking with Xi Jinping. It's fantastic. But if you can zero in the guy by the fries, he knows. Like that was like a Dogecoin trader that's back at In-N-Out Burger who's just like, that's Janet Yellen.
Is it definitely her? Because it's just
Yeah,
the
it's
back of her head.
Maybe not, but. As far as the internet's concerned, this is the reality we live in.
I did like how they cleaned up San Francisco in a couple of days.
Yeah, that was wild.
Put
It
all
can
those,
happen quickly if
put
they,
all those
if they want
fences
to.
up.
Yeah.
It's honestly mind blowing.
I have friends who live there and they're just outraged.
Yes, they should be.
Yeah.
Well, the taxes are working now. It's fine.
Where did they ship all the...
That's what I want to know.
I heard they killed
That's
them
exactly what I want to know.
Come on.
Where did they go?
Under Bloomberg, I think there was in New York, there was like a campaign that was like one-way tickets to the Poconos in Pennsylvania.
Don't do that to the Poconos. It's nice.
I
It's
think
a
it
nice
lasted
sleepy
for
mountain
years.
town.
There's got to be a video of where they all went.
Yeah, be
It's
marched
the
out.
massive homeless jubilee sponsored by
see it.
Newsom. I want to see
It
it.
took them all down to LA.
I mean,
The Rock.
The Rock, yeah, put them all there. Like a zombie apocalypse. Just throw a load of fentanyl on the island.
There's one bundle of fentanyl hidden somewhere in this island.
Just walk across that bridge.
apparently that was the first thing they discussed. They were like, gee, it's just like, please stop sending fentanyl over. It's destroying us. He's like, all right, we'll work on it.
Then why clean it up? Leave it. Be like, look at this. This is terrible. Or maybe it's like,
And he
it's not
would
a
go,
problem
"Success."
anymore. All right, we're on to this. We know how to clean it up now, obviously. Stop your games.
Do you think that that Chinese entities are contributing, donating, influencing the outcome of the U.S. presidential election? And
Gavin Newsom went there first, right? I think like 6 months ago.
was that a
he made trip.
fundraising? Was that a fundraising trip?
I mean, we have, I don't know if it's like direct campaign financing, but I mean, Hunter Biden was directly involved with some Chinese business deals, like indirect maybe.
Yeah.
Is there anyone he doesn't take money off?
That's another topic. I mean, we're getting a little off the rails here.
Do you want to go into the
Yeah, we're getting
laptop?
off
Is that what you want?
No, not the laptop, but like all these mainstream media articles about like Chinese miners in America, which I think there's a lot of.
I think a lot of hash rate came back on in China, though. I think that there was like I would be curious at both of your opinion about this. I don't know if we've gotten into this before, but
It's coming on here too. Chinese hash rate is coming on.
Yeah.
a lot
here.
of it's moved here.
ton.
But I think there was sort of just like a crackdown and then like increased oversight, and certain miners with certain connections were probably allowed to plug
Could
back
be.
in China.
If you look at the chart of Antpool hash rate,
Yeah.
which is all the Bitmain adjacent hash power, it's literally gone parabolic. I think they went from 30 or 40 exahash to 130 over the last 6 or 7 months.
It's a big country. You know, those are little ASICs.
I know for a fact they're plugging in a lot in North America,
Yeah.
all over the place.
Well, that's the question. Is it a bad thing? Is it against our national security interests?
Miner on miner sabotage. I think we probably see it at some point in the next couple of years. I think difficulty is one of the easiest things to have a direct influence on if you're a mining operation.
Walk through that.
Well, if they just sabotage somebody else's large data center or access to power or something like that.
What, blowing up the substation?
Yeah.
Yeah, right. Like, and if you're able to say, I can take however many gigahash off the network instantaneously, and my rigs are going to keep running on a 10-minute basis. You're clipping, you know.
That's the block withholding attack. You familiar with this attack? It's a crazy attack where basically if a pool, either pool or firmware, can conduct, it's most easily conducted by firmware, where basically if somebody has control of your firmware, they can write a script in it where if you find a valid block, it actually withholds the valid block from the network. And so you can't steal block. It's impossible to steal it. And there's no way to actually get the Bitcoins. But if you have enough hash rate that's compromised where you're withholding valid blocks from other miners, then theoretically every remaining pool is earning slightly more Bitcoin. And I know for a fact this attack has happened and happens on an ongoing basis, certain firmware providers.
We have seen a lot more firmware come to the market in the last couple of months, which is nice. I think more competition in that space is great. Luxor, Cathedra, Brains with a big update.
It's a big update. It's about time. Don't need an SD card to download that firmware anymore.
Yep.
Competing against whom?
What do you mean?
You didn't mention ASIC.to.
I think I've said enough.
Yeah, fair enough.
Now I want to know.
There's a pretty centralized market as far as ASIC manufacturing, and it's not just the hardware, it's the software as well, what it ships with, right? Not all miners are as sophisticated when it comes to, diving into the nuances of the software that's on their equipment.
Yeah.
And potential,
There's good firmware there.
spyware.
Bigspit is a new entrant into firmware. Fantastic. They make microBT firmware.
Yeah, and
Good experience.
the manufacturers don't make it easy for people outside of their businesses to make this firmware. It's a lot of
That's the interesting part that I don't understand is if you look at a market like Texas has 2.4 gigawatts of mining power online. So it's approximately 1/6 of all mining power. And every single miner in Texas is curtailing some percentage of the year, at least the on-grid ones. The electricity market is insanely volatile. They're responding to price. That's why the grid really likes the mining community. That's why the politicians like it here. The stock firmware that you get from ASIC manufacturers still does not facilitate curtailment. You have to use a third-party firmware provider.
And those third-party firmware providers don't have an easy avenue to actually build the firmware that they're providing the market. It's
Why do they make it so difficult?
Basically have to hack make and model specific. Like
Right.
each one is a little
Yeah,
bit
but
different.
why? What's their incentive to make it difficult?
people are going to buy them anyway. They don't want to spend the money on the research to do it.
I don't have a good
okay.
answer.
Yeah.
It doesn't really make sense. You would think that they would want to delight their customers by not forcing them to then go and pay an aftermarket vendor for custom firmware.
But is it they've got so much control over the market they go, fuck it, I don't care.
Maybe
Maybe.
on the device.
Or maybe they could say,
good
we
way-
actually release stock firmware that has these bonus features and you can pay us that fee. I mean, and the way I see it right now is the mining community is paying between 1% and 2% of their block reward revenue to third-party firmware developers. And the ASIC manufacturers would be in the best position to get that revenue because they're the ones who program the firmware in the first place. So they're just leaving money on the table.
If you assume good faith, they stand to gain, I think, a fair amount by making this stuff much more transparent and open to the customers.
There's other areas too. Voltage ride-through is it's a hot topic in ERCOT right now. Where basically like when you're operating a power grid, if the voltage changes suddenly on the system, different types of devices on a power grid have varying degrees of voltage ride-through, which means, solar generator, wind generator, natural gas plant, industrial user, Bitcoin miner. Voltage drops suddenly on the system, and each one of those different power grid users or participants responds differently to the voltage drop. The way that a lot of this mining equipment is manufactured, the resistance to a drop in voltage is below the standards that good power grid operating standards are set to. And that's something we've been working on a lot in Texas is how do we go and ask the ASIC manufacturers to make a power supply that has more resistance to voltage changes so that it doesn't undermine the stability of the power grid. Right now, it's not a major issue. There hasn't been any incident, but it's hard to get them to do common sense stuff.
Yeah, but it's like small things like that historically in the ASIC manufacturing world are just like how are you doing the power supply units? Like they vary from model to model.
Yeah.
And it just creates a massive headache for an operator.
It's a crazy industry. Like,
It just sounds like that you need a domestic manufacturer of ASICs. And I know there's been some work there, but I'm surprised with the money that can be made in this that no one's got there yet.
Well, the upfront capital is pretty immense. So
For the research, the R&D.
the foundry space, the chips, all that.
Yeah.
it's a lot. It's a multi-year commitment with 8 to 9 figures of capital, and you're basically risking Bitcoin, the price of Bitcoin, by doing that.
Competing against at least 2 foundries that have just such an immense, insurmountable like advantage in terms of a head start. Like TSMC is extraordinarily good at what they do.
Yeah.
And Bitmain and MicroBT are making really good devices for a long time now. Like catching up to that is not a guarantee, even with unlimited funds.
But this isn't a TSMC?
Yeah,
TSMC,
This is
and
not an issue with
Samsung.
them. This is an issue with Bitmain and...
Well, it's where they source
Manufacture-
their chips. It's the reliability of the semiconductors themselves, of the
But is
ASICs.
the work required on the chip or is it required in the device as it's manufactured?
The power supply is where the voltage ride through needs to change, and then the firmware is also technically not where the hash board lives. So that's technically both of those problems could be solved. But I think what it boils down to really, Thomas is saying, there's these entrants who have an entrenched advantage. They're well capitalized. They've allocated ASIC capacity years in advance. It's really capital intensive and hard to catch up with them. The way that they do business is much more kind of Eastern style versus Western style, where it feels like they're operating on a short time frame as a business. They're just thinking, we want to make as much money as we can in 1 to 3 years, and we're not really worried about winning customer relationships for 5 years or 10 years or whatever it might be. And I don't know if that reflects their view about the price of Bitcoin, or maybe they just want to make a quick buck and there's no lasting equity value in their business. But a Western style company, like a company like LL Bean, it's like a 50-year company. They sell you a shirt that's going to last 15 years and they know you'll come back because it's a great shirt. They're really thinking like long run, we're going to win this guy for life. And that's the opposite end of the spectrum, Western style business thinking. We need an ASIC manufacturer who thinks more like that. I think MicroBT does think a little bit more long term. We've had good experiences with them.
I mean, their machines are tanks.
Yeah, they're good machines.
Yeah. They may not be able to handle too much heat, but
Some of them,
if they're in a good climate, they're tanks. I mean, and that's because Dr. Zhang designed the AK-47 of the mining industry up to this point, which is the S9, right? And that's who went and started
And then the
MicroBT.
M30.
Yeah.
Although they've started to do some stuff with decreasing the number of chips in their miners and running them at higher frequency and voltage, so they have less thermal headroom. They're succumbing to the playbook of less scrupulous ASIC manufacturers, unfortunately.
Are you worried about the halving? How are you planning for that?
No, not at all. Never thought about it.
That's a lie. You're a damn liar.
Yeah.
Yeah, if the hash price gets cut in half.
Yeah, every miner
It won't
is.
work out like that, would it?
Good.
Oh, yeah.
But then a whole bunch of miners will go offline, right?
Yeah.
And so
Well,
then it will level
Yeah.
back.
It
Winter's
depends
coming.
where hash price is heading into it. I think the right thing to look at is where we call it the Bitcoin opportunity value. So you convert hash price into a dollars per megawatt hour value. So you can compare that against everyone's electricity cost. So right now it's like $95 a megawatt hour. If the halving were to happen today, there probably wouldn't be much hash power that came offline. Everyone would just get their revenue cut in half, and then there'd be attrition that occurred over the months that followed. Let's say that the Bitcoin opportunity value was $65 a megawatt hour, and the halving occurred, so that would drop the Bitcoin mining revenue expressed in dollars per megawatt hour to $32.50 for the majority of miners. That would probably knock off like 40% of the network, I think. I think you look at what would happen in Texas, like everyone in Texas is heading into the halving and basically not locking in their power contracts. So prediction would be next summer, there's going to be far less Texas-based miners who are earning electricity optimization revenue. Like Riot, Iris, shout out Iris, sponsor the pod. They earned a ton of electricity trading and optimization revenues this summer because it was one of the hottest summers in Texas history with 2 months in the top 5 power prices of Texas history. And so the way that you do that is you lock in a power contract, and then when prices rise above the power prices rise above the opportunity cost of my Bitcoin, you shut down and you earn the difference. The halving is in April. Texas summer's, in June. So if let's say that Bitcoin mining revenue drops to $35 or $40 a megawatt hour after the halving, hedge prices right now are $55 to $60. So if you hedge for the summer, you'd be locking in a loss. And so a lot of miners are not doing that, or are waiting with, if market conditions were what they are today, they would not do that. And so the way that it'll work is that miners will be just responding to real-time electricity prices, which means that the Texas hash rate their uptime would reduce from, say, 90 to 95% down to, based on this year's numbers, something like 65 to 70%. So the difficulty adjustment would come not from miners actually going offline, but from the miners who are remaining online, their uptime just going down by 25%.
So how will that impact the grid?
It won't impact the grid at all.
So there won't be a scenario where you have the miners, because we have a strong narrative now as like miner grid integration.
Yeah, it would arguably, it depends on what narrative you want. If you want the narrative that Bitcoin miners are mostly consuming stranded renewable power and excess renewables, dropping the break even means that that's happening more, because when there's not a lot of renewables generating, the cost of power is the highest in Texas. Like the highest hour of Texas electricity pricing in the last year was 7 to 8 o'clock. After the sun goes down, before the overnight wind picks up, there's no renewables. During the month of August, I think that it averaged $1,000 a megawatt hour or something crazy like that. And so, that if you expect that trend to continue, then the miners will only be profitable if they're consuming all the renewable hours. So 9 a.m. to 4 p.m. and then probably 10 p.m. to 5 a.m. That's when the wind picks up. The solar is obviously during the day.
Yeah, I think Pierre has written a bot that takes a screenshot of the ERCOT energy generation at 7 p.m. every day.
Power is spiking because the sun went down. Yeah, it's true, man. You watch it. It's like a clock. And right now in peak solar generation, there's 15 or 16,000 megawatts of solar in ERCOT. And so when the sun goes down, you're losing a tremendous amount of generation over an hour and a half, 2 hour period. And so that it has to get made up somewhere. So the price shoots up and all the flexible loads, miners shut off. Anybody else who's sensitive to price shuts off.
Nat gas spins up. Natural
gas plants spin up. Peaker plants spin up. And it creates a real challenge for these grid operators. All the batteries deploy. It's wild. It happens every day.
It is wild. Should we talk about some positive stuff before we finish off? What was everyone doing tonight, by the way?
This is all positive.
Well, yeah, but
you got to talk about this stuff.
I know.
It's therapy for miners.
Therapy
this
for
is like
miners.
a miner therapy.
I find mining so interesting, but I know
it's the most fascinating and masochistic industry on the face of the planet.
I don't know how you cope with it, because it's so hyper competitive.
And then imagine you're in a grid where the power price, you're either mining for free and the cost of power is zero, or the wind isn't blowing and your entire operation is shut off. So you literally, in addition to the volatility of Bitcoin, now the first thing you check when you wake up is price of Bitcoin. The second thing you check is the weather forecast. You're praying for the wind to blow one day so that you can mine again.
Would you reckon it's harder, mining or running a bar?
They're both, I would say, like media or like content generation are probably the triple threat there.
Media and content's easy. I don't know about you. I think that bit's easy.
Media is fun.
Media's fun.
Well, you guys are very good at it. For every one of you, there's 100 failures.
Crushing industries, masochistic.
I wouldn't say they're failures. I think they're just early and started.
They're low audience media brands. They're podcasting for their mom.
Niche.
They're like home miners. They're the home miners of content. They're all important.
Mining's harder than hospitality, I think. mining is like just soul crushing.
But which do you lose more sleep over?
Probably hospitality.
That's just because
You
you're
get worse
staying
sleep
at
in
the bar.
hospitality because you're staying up later and drinking more.
Yeah.
There is that. That is another thing I've noticed. I
No
don't know
nights
about
or
you.
weekends, huh?
Weekends now. I'm like Friday, Saturday night. I'm going to bed at like 2:30.
No, I'm flipped. I'm really only at Pubkey Tuesday, Wednesday, Thursday.
Really?
I keep the weekends pretty protected. I got little kids and stuff.
Yeah,
so.
fair.
But it's usually like the Bitcoin programming on Thursdays that ends up being the late one for me. So then it's like going into the weekend, like recovery zone.
I've been working the door the last few weeks with the doorman.
Nice.
Yeah, because there's been too many incidents on the door. So like trying to figure out what it is.
What, underage kids?
It's not underage kids, but what we have is like between 18-year-olds and 21-year-olds coming in.
Mm-hmm.
They don't spend much money, and they tend to be the ones who, if there is a fight, they're the ones they're the ones starting it. And then after,
Would it be okay if they had like robust tabs? You can start a fight, but
No,
like
I mean,
for two ciders, what the fuck?
it's not even worth that. And then we had an issue where we close the doors at 1. Our license says we can't let anyone in after 1, but we can stay open till 3. You get people coming up after 1 trying to get in. You're like, no, the license says we can't. And then they're banging on the doors. And then sometimes when we open the door to let somebody out, there are people trying to charge in. It's fucking weird. It's like, what are you doing? We're obviously going to throw you out, but people are so wasted. Dealing with drunk people, it's a challenge.
Yeah.
Yeah. So I've been working
Can't
the
say
door.
I've been working the door.
I've been working the door.
I did a doorman job at a bar down the shore. I thought I was going to do that one summer. I did it one night. I was like, I'm going to figure out another job.
It's fucking
I don't feel
bullshit,
like dealing
isn't
with
it?
all these drunk people.
It is bullshit. All right. What are you bullish on? Then we can all go out.
What am I bullish on?
Yeah.
I mean, Texas mining, quite bullish.
I heard you're
American
a
mining.
Dallas maxi as well. You love
Dallas?
Fort Worth.
I like Fort Worth. This is my first time in Fort Worth. Dallas, we were talking about Dallas is the city of hate.
Why do you hate Dallas?
I know, I don't hate Dallas. That's their nickname. That's their official
city
nickname.
of hate?
The city of hate.
I
yeah.
I mean, you will, right? Fuck the Cowboys.
Yeah, I mean, I'm not like that hardcore. Like I hate City Dallas.
Dallas is
I
awesome.
didn't make up the nickname. The nickname came
Have you
from
got it?
the early 60s. It was one of the most extremist like political situations in the country, which led to, even before JFK's assassination, they like spit on Lyndon Johnson's wife after like a political fundraiser or something.
But you're bullish on Texas.
Yeah, I think what Jamie was saying earlier about the political makeup here and sort of the cultural ideology is quite a good fit for Bitcoin industry, and I think that it will be for a little while. I do think that there have been times that Texas has been told to knock it off by the federal government, and we'll see if like some of the FinCEN stuff or other regulation at the federal level is going to run into conflict with some of the things that like the mining industry would like to see here in Texas, and if the protections at the state level are going to win out. But for now, I think it's important. I'm excited for this conference. I'm excited to see what some of the politicians have to say as they're begging for nickels and dimes for their campaigns.
What are you bullish on?
I'm bullish on Texas.
There you go.
I went all in on this place, and I'm from Texas, so I guess I came back all in, but I was born here. Then I grew up in New York, and I also owned a business in Washington State. And, you just never really felt like those states were on your team. Mm-hmm. And you come here, you're doing a brand new thing. It is a totally unique electricity market participant, Bitcoin mining, how fast it is, how price sensitive and responsive it is. And I like to say it's an economically perfect consumer of electricity. Electrical grids have never seen anything like it. They let 2,000 megawatts of Bitcoin mining load get onto this grid, which is a substantial amount first. And then, okay, let's regulate this now. And the regulation isn't, you're bad people, I'm Elizabeth Warren, you're all going to jail, and thanks for financing Hamas. It's, all right, how does your business work? What makes you successful? What kind of regulation can we put in place where the grid wins and you guys win? They set up a task force, the ERCOT Large Flexible Load Task Force. They've got working groups. the grid comes out and visits our site in the middle of the desert, like 4 of them. They pile in a car and they come out and visit, spend 3 hours asking questions. It is really like a refreshing regulatory approach. And this is not just with us. I mean, this was wind power and solar power before, let it grow, regulate it afterwards. And it's not onerous regulation. It's let's make it work. Space travel, same thing. Lyndon B. Johnson Space Center, that's where NASA got started. It's because they let it happen here. And then Spindletop.
They spit on his wife.
Oil, drilling for oil and coming up with a good framework for drilling for oil and gas. 1901, discovery of Spindletop. That and the regulatory framework for drilling oil in this state has made it the 6th largest economy in the whole world as a state. Like, this is the pro-business, free market, good regulatory environment where it's not onerous and they sort of ask questions. They're curious. It's wonderful. Feels great to be a Bitcoiner in Texas. God bless Texas.
Just gonna say, God bless Texas.
As a young child growing up in New York, you said?
I was born in Houston, Texas.
But did you feel like an expat, like something was missing when you were
in the mean streets of Connecticut? Yeah, it did. It just felt like
I wasn't going to full docs, but I did love that part.
It felt like a little piece of my heart was missing. And then I came back to Texas, and now my heart is full again.
That's great.
Love it. Marty?
I'll echo bullish on Texas.
Wow.
I'll go a different route though. I mean, Texas, we're talking about not your keys, not your coins. Texas really took that to heart with gold. They have their gold bully, and Kyle Bass convinced the state treasurer to go get their gold from New York and bring it to Texas, and it sits in a vault.
I love that move.
In Austin.
Yeah, it's just such a power move.
And so there's like an intuitive understanding of we don't want third parties controlling Texas money. And I think they can easily see the value of Bitcoin and the value prop it provides in the not your keys, not your coin sense. And I think Texas is going to protect Bitcoin. I think other states are too. I think that is
Wyoming.
One thing I'm very bullish on. Wyoming, Tennessee, Kentucky, Oklahoma, North Dakota. I think bullish is probably not the right word, but I'm excited to see this jurisdictional arbitrage between states here in the United States play out, because I'm not a big black flag guy. I'm not going to another country. I'm not leaving the United States. Like, I think we can solve it here. And it's just letting this federalist system that the founding fathers put us into, letting that play out and that competition heat up.
Wicked. Well, I'm always, every time I go home from Texas, I get home, I'm like, oh, fuck this place. We've got problems. I'm still bullish on Bedford, though. Wicked. Well, thanks, everyone. Danny, you want to say anything? No? All right. Should we go and drink some beer a bit later?
That sounds nice.
Let's go and do it.
Lovely.
All right. Thanks, everyone.
Thank you.
Thank you.